Welcome to Profile Traders. This is Reza and we are October the 24th. Last night in my recap, I specifically said if we do break below 1936.75, our target will be 1931.75. As we are looking at it, last night tick low was 1931.75. So news came out that there was a doctor diagnosed with Ebola in New York, and obviously the last place on earth you want Ebola to float around is a major city like New York. So panic kicked in, massive sell-off came in, but levels being levels, 1931.75 stopped the move, and then we tested back with the next period, and as the low didn't break, they reversed this thing and they bought it all the way to the very last minute of the overnight. Now, how much of this was actual rational buying, knowing that no, there is no problem with Ebola, and how much of it was direct hands of the Federal Reserve and other entities coming and avoiding a situation of panic in the already very disturbed markets? My guess is that the second one took place. Then when this morning we opened, there was a little bit of a confusion back and forth within the first half hour. Then the second half hour we attempted to come break down, but as soon as we reached overnight point of control, buyer again showed up, reversed this thing, and on the lightest little pre-weekend volume we managed to be now at record high for the day, close to 1960. Now this 1960 has a significance, if I can say that. Because if we look at our daily chart, 1960 is the last time where the seller showed up very aggressively and took the market down pretty much straight to 1815. Therefore now, if this seller is no longer here defending its land, most likely we're gonna go for a retest of the high. However, if I look down there, as this phony baloney push up took place, look at the volume divergence down there. Extraordinary little buying interest showed up on this retest. Thus far, this retest, as of right now, it is very bearish based on volume. But as we have learned in the recent time, several years, several months, that volume is an absolute irrelevant equation in the price moves in these markets. Why? Because volume is a thing of the past. The past, you had to have actual real buying required to move markets around. As a result, it was required that up move should have volume in it in order to be initiated. Those days are gone. Those days have changed. Now the manipulation in the markets are at such severe levels that if they wish to take this thing up 40 points on 5 contracts, trust me that they can. So if you lose money, you're on the wrong side, but volume wasn't there, you can sit down and cry all day long that why you lost money without any volume confirming it. Trust me that it won't change a damn thing, your money is gone. So yes, there is volume negative divergence in this up move, but these thieves, they can take this up to 5,000 in a week on 100 contracts if they wish. Of course I'm exaggerating, but you get the picture. So 1960 is extremely key here. Can we trust what happened today? Absolutely not. Why? Because it's an end of a week. Again, volume was very low. I have seen this kind of a scam taking place right before vacations, holidays, weekends, etc. And then comes back Sunday night, Monday, completely different scenario. But for now it is bullish. For now it is at extreme resistance. And for now 1960 needs to break to the upside. Otherwise we're going to come down for a little bit of a drive to downtown. Downtown means we are going down. So what is our first level of support now? Right now the real support becomes at 1950. As long as we do not break 1950, we can retest it and continue back up. And if we do not test 1950 and we continue to break above 1960, we should definitely be on a lookout for 2000, because there is not much prior to 2000, not really much of a resistance at all. And for anything bearish to happen, we have to break below 1950. We do that, target 1936.75 and then the famous 31.75. Now let's look at the chart of crude. Where did I put it? Yesterday I warned you that do not be surprised at all that today you will come back and we are going to be again back into the 80.40 to 80.01, which was the buy zone that I gave you. Well, if you bought it into my buy zone, it went to 81.33, paid almost $700 on one contract. Things have not changed at all here. We are in a trading range. Again, your trading style has to be to capture the moves right, to ride them fast, and to get out fast with profit. If you hold on to anything, this extremely violent back and forth will wipe you out of your profit and of course out of your capital as well if you do not know what you are doing. Therefore, still support remains at 80 to 80.40. Resistance now is at from 82.40 to 82.70. Sell up there, buy down there. Avoid the middle, because the middle will churn you and chop you until it decides to either break below 80 or either it decides that it wants to go towards 85. But it's a very, very, very volatile, fast and furious market as it is. As for gold, nothing at all happened. At all. The brackets that I gave you yesterday, they remain the same. 29 is support, 34.8 is resistance. Until one of these two levels break, nothing will happen. A break below 29 should take us to 20 and then 15. A break above 34.8 should take us to 42.45. The fact that we are not seeing excessive long liquidation and massacre to the downside can build a little bit of a bullish case here in gold, because if it was under tremendous pressure today we should have seen a meltdown, but we didn't. As for Euro trash, it looks like we are building a little bit of a support here, but the damn thing, as soon as it started to exit out of 1.268 and break out of the current consolidation, it got knocked down again. So what can you conclude here? You can conclude that there is a little bit of support building. You can conclude that there is absolutely zero buying interest yet. At the same time, selling interest is drying down. Therefore, buying interest drying and selling interest drying both at the same time you will enter a dull market where nothing much will happen until one side or the other decides that it wants to commit, and then we're gonna get direction. Therefore, a trading range that goes on now from 1.261 to 1.2706, you sell close to that 2706 and you buy close to 2611 until we decide to break from one level or another. Now if we consolidate and consolidate more towards 1.2706, right below that level, once it's gonna decide to break it, the break should become real. Same thing down there. If we start to consolidate near the low, the break of 2611 is going to be real. So we will watch these two parameters, but nothing at all super duper constructive is happening in euro. This is Reza again with Profile Traders. If you wish to learn market profile, give us a shot. Have a great weekend and talk to you on Monday.